All right, welcome back to another video. My name is Ian Major. I'm an entrepreneur, investor, and all-around raging capitalist. And in today's video, I am serving up your piping hot April 2021 Bitcoin Digest. If you're new to the channel or if you've missed this kind of monthly series in past months, the point here is really to touch on some of the major happenings in the world of Bitcoin, everything from the technology itself to recent price action to different institutional activity and more. And so in today's video, I'm going to be going into a number of interesting topics. We'll first start with recent price action. As those of you who have seen this series in the past know, the point of this is not to make any kind of short-term or near-term price predictions. The only kind of price that matters is the fact that one Bitcoin equals one Bitcoin, one Satoshi equals one Satoshi. And so really all you should be caring about is the height of your stack. How much Bitcoin do you have? How many sats do you have? And less so the kind of short-term fluctuations of the fiat exchange rates that they're often priced in. That being said, it's important to just understand the kind of market dynamics and the different participants. It gives us kind of clues as to the health of the overall ecosystem, which is really important. And so that topic will then parlay nicely into miner fundamentals. And so miners are such an important part of the ecosystem, and we'll do a bit of a health check on how things are going there as part of today's video. Hopefully you'll pick up a number of different metrics that can be used in the future to gauge this. And then we'll round things up as we usually do with some of the different news and institutional activity. So you don't want to miss anything in this rip-roaring edition. If you're new to the channel, hit the subscribe button, turn on notifications. You're not going to want to miss anything. I'm putting out weekly, at least, videos here on the channel going forward with all things Bitcoin. But with that out of the way, let's go ahead and jump right in. In terms of price action over the last month since the last edition of this series, we've been, for all intents and purposes, sideways. Right, certainly in relation to the kind of historical norm, during these cycles, and so that may seem quite uninteresting. We get spoiled when number just goes up, but let's take a little bit of a look under the hood because there's some important dynamics that are unfolding. One of the big ones is the fact that Bitcoin obviously has breached the $1 trillion market cap, corresponding to a price point of about 54,000 or so. And as Willie, the always excellent Willie Woo, is pointing out here, is that 54K appears to be developing as the strongest area of what he calls Bitcoin price discovery since about the 11K mark. I'll explain this chart in just a moment, but essentially there seems to be this significant psychological effect that's coming with Bitcoin as a $1 trillion asset. And so that's very good. The sort of amount of accumulation that happens around these levels, let's call it kind of 54 to 59, where we've been sort of stuck for most of the last month. It's actually very good and healthy. It means that people are accumulating. Coins are going from weak-handed sellers to strong-handed hodlers, and so this is good. And as he's talking about here, when such a base forms, there's typically pretty explosive, price growth in the near future, and so this is good. What this chart is showing, this is actually something that Willie codes himself based off of the URPD metric from Glassnode. And so, I'm not sponsored by any of these folks, but I have been looking a little bit into Glassnode, and they have different kind of tiers, including a free tier where you can get some very basic metrics. And it's interesting, right? It does give you a deeper kind of appreciation and understanding for what's happening on chain, so to speak. But I just thought I would highlight this measure, which is a really important one. So URPD stands for UTXO, Realized Price Distribution. UTXO, as you'll recall from prior videos, stands for Unspent Transaction Outputs. And so if I have one Bitcoin and I send half of that to a friend, that 0.5 Bitcoin becomes an unspent transaction output for my friend. And so that then can become an input into another transaction. And so what this metric measures is essentially the price at which these UTXOs were created, or said another way, the existing Bitcoin that last moved within these different price buckets. And so, they have different ways of kind of partitioning that out. But essentially it's showing you the distribution of prices at which existing Bitcoin have sort of last moved. And so what Willie was saying in that last chart is that we've seen a ton of activity around that kind of 54, 55 K range, which suggests that, a lot of people are arguing once we truly kind of break out from, above 60K, that this sort of level of 54, 55 will become quite a strong kind of support level. So again, just interesting, right? Like the minutia of the day-to-day price movements, I think, is less something to worry ourselves about, but it is interesting to understand how things are flowing. The other kind of element to be aware of is this worsening, supply crunch of Bitcoin, right? And William Clemente here, who has been putting out a lot of great kind of on-chain analysis, is highlighting this just extraordinary kind of inverse relationship between, on the one hand, you have the balance of Bitcoin on exchanges, as well as the price of Bitcoin, right? And it's pretty obvious that these are, at least currently over the last year, very much an inverse relationship. And so you can see, right, we've sort of moved over, well over 550,000 Bitcoin off exchanges over the last year. And when we zoom out to a even longer time frame that goes kind of way back, you'll actually see this is pretty interesting, right? It is certainly true that there's just generally more Bitcoin on exchanges now versus years prior, which makes sense given that there's more exchanges, there's more people, there's more sort of adoption, institutions have sort of come in, etc. But you can see that about March of last year, you have this very interesting inflection point, and really since then it has been a one-way street down in terms of the balance on exchanges. And if you look back at the historical, full history of this, you'll note that like this really has never happened, right? I mean, you've never seen that degree of marginal change in the balance on exchanges. And so I think it's less about the water level of this metric and more about the kind of marginal change over a certain period of time. And so this is, I think, very bullish, right? And kind of gives us, part of the story around the supply. In simple terms, right, William also kind of quantifies this, right? So this averages out to about 1,500 Bitcoin, per day that's getting moved off of exchanges. And keep in mind there's only 900 mined per day in this current halving cycle. And so, net, you're seeing this outflow off of exchanges and supply tightening ever further. The final piece I want to mention in this section is one of the big themes that you saw me highlight in the last edition of this monthly series is the fact that miners have been selling, a lot of their Bitcoin from their treasury. And this is normal, right? I mean, miners have operating costs that they currently need fiat to take care of. We've talked about how that may change in the very near future if they're able to simply borrow against their Bitcoin as opposed to selling it outright. But that's for another day. But as you can see here, really leading even well through March, we're looking at the net change in miner position here. And you can see that they've now gone into accumulating Bitcoin as opposed to selling it off. And so this now begs the question, what is sort of the broader story for miners, given what a significant role they continue to play in the ecosystem? And so in that last section, we saw a number of signals that seem rather bullish, right? This kind of impending, supply crunch, this kind of strong support around the $1 trillion market cap level, roughly 55K. But we also saw that, the miner kind of selling really continued through March, but has now sort of flipped into accumulation mode. And so, all of that would seem to be quite bullish. You furthermore have lots of other signals suggesting that, more and more coins that are being taken off exchanges are going into cold storage. More and more institutions are hodling and are snatching up and buying coins from, the pudding-handed retail investors that are selling their Bitcoin to go buy some, silly big screen TV or BMW or what have you. You do you, but as we know, there's a lot more to play out here in the long term. And so, we saw that kind of flip over from the miner net position in terms of their Bitcoin holdings. And, it begs this broader question of, well, how are things going more broadly? And I'm bringing up a thread here from Raphael, who's the CTO and founder of Glassnode, which provides a lot of the kind of metrics that you're seeing. And he's got this really nice, piece that kind of goes through a couple really, really key measures. The first is around the hash rate. And so what we're looking at here is, on the left-hand side, we have the exahashes per second. So this is a measure of the computational power that is going into securing the network and validating transactions. And you can see that it has basically been for all intents and purposes, a one-way show up. And it's recently crested an all-time high. This is very good. This means that there's ever more computational power going towards securing the network. And you would want that as the price and value of this monetary network increases. So this is a very good and healthy thing. The other piece that we often like to look at is the Bitcoin mining difficulty. So recall in some of the prior videos I've gone through the how the difficulty of mining new blocks gets adjusted roughly every 2 weeks in order to ensure that if I have an influx of miners coming in, given where the price of Bitcoin is at, that influx of miners is not going to cause a huge increase in the issuance rate of Bitcoin, right? And so this is a difficulty adjustment to assure that on average, a new block is added to the Bitcoin blockchain roughly every 10 minutes. And we can see that the Bitcoin mining difficulty is, it's way up. It's up, 66%, I think, versus last year, and about 24% year to date. And so again, this is an indication that you have more miners coming in to participate in the ecosystem. So what usually ends a cycle is miners capitulating. Miners sort of saying, all right, it's been great. Now I'm going to sell out. I'm just not competitive anymore, etc. But as we can see, the difficulty level is still rising. And so that's a good sort of indication that, we're far from any kind of turn in miner sentiment in that regard. The other piece is just, daily kind of miner revenue. And so this is a 7-day moving average, again, from Glassnode here. And so basically over the last month, miners have cumulatively made about 50 million US equivalent per day. And that's up about 4x versus last year. And so, and again, that's despite the increasing kind of hash rate and difficulty, which means that even though there are more miners coming online, they're still making, a significant amount of money. And so this is good. This is good for the health of miner businesses. And then this kind of final view that I think is really good is this ratio, or this output multiple, as they call it. And so what this is basically a ratio of the level of miner outflow. So, how much are they kind of selling Bitcoin onto the market relative to the kind of historical average. And you can see pretty clearly that in the past, when you have peaks in the Bitcoin miner outflow, that is corresponding to turns in the in the price of Bitcoin. And, relative to the last peak in 2017, 2018, you can see that currently we're actually, way far, right? We're way, way far away from even being in line with the last cycle. And so, said another way, there just appears to be very little incentive for miners to kind of cash out and capitulate. And so this is very good news, for anyone saying, oh, there's the top. It would just, nothing here would seem to kind of possibly suggest that we're anywhere close. And so all of that's very good news, right? The minor fundamentals appear very healthy currently, coupled with the fact that we see shrinking supply on exchanges, that we see this very kind of strong level of price discovery around the $1 trillion market cap level. All of this bodes quite well for the future Bitcoin, certainly in the near term and obviously in the long term. And so to round this video out, I want to just kind of dance through a couple of the kind of big institutional stories. Not because this should change anything about what we're doing. Should still be dollar cost averaging. Keep stacking as fast as you can. While we still can below 60K, etc. But it is, I think, important to just be aware of some of the players in this space, because anytime an asset becomes more institutionalized, you have some good and bad, right? Good being generally increased awareness, generally increased adoption, but bad being the potential for more regulation, price manipulation through kind of paper derivatives of the underlying asset, et cetera. And so some of the big ones that you probably will have seen, Coinbase will be going public. It's actually not a traditional IPO. They're going to be doing a direct listing of their stock with the stock ticker COIN. And so, again, I think good for broad adoption and kind of awareness. You've also seen Morgan Stanley come out and say, they basically are offering to their wealthy clientele access to Bitcoin funds. So that's very exciting. Goldman was soon to follow by becoming the kind of second big bank here in the US, offering Bitcoin to its wealthy clients. And then NYDIG recently did a survey that showed 62% of clients are willing to switch financial advisors to know more about Bitcoin and get access. So all again, very kind of bullish and good. But the flip side of that is, let's just remember, not that long ago in mid 2020, Coinbase got a lot of flack for essentially its desire and intention, and now in actual practice, selling blockchain analysis to entities like the IRS, like the DEA, after it acquired a company, Neutrino, which does kind of coin surveillance. And so this is the kind of double edge of the sword. Think about it. Coinbase, like any company, wants to maximize profits. One way to do that is by getting in bed with regulators, right? That's been a playbook that we've seen for really every industry. And so the more they're in bed with regulators, the more regulation that comes into the space, the bigger a moat, the likes of a giant Coinbase will have. And so this is obviously a very bad thing. And we should be cognizant and aware of this. There's been a lot of flack going around with platforms like BlockFi as well. You'll see the term "not your keys, not your coins," referring to the fact that if you don't have custody of your Bitcoin, then for all intents and purposes, it might as well not be your Bitcoin. And this is true. This is very, very true. I would encourage you to be really, really thoughtful if you're putting your Bitcoin on some of these platforms to earn interest and different stuff. There's, I think, good platforms out there to do that. I would encourage you to do no more than a kind of small fraction of your stack. It's just not worth it. And so be really careful and don't, for God's sake, leave your Bitcoin on exchanges like Coinbase and others. Be using cold storage like Cold Card. Ledger, Treasure are also okay, okay kind of options as well. And in terms of the different financial institutions like Morgan Stanley, Goldman coming into it as well, we've seen a lot of news around kind of prospective ETFs for Bitcoin. Just keep in mind that, like we've seen with gold, all these kind of paper derivatives of the underlying asset can have a suppression effect on the price, and can give these financial institution participants the ability to kind of influence and manipulate price to allow them to kind of buy in at more favorable levels, right? So it's a big double-edged sword. I think net, it's all good for the ecosystem, but it emphasizes the need and importance to be really, really careful, thoughtful about your kind of Bitcoin privacy and security. I'll link the kind of the playlist that I've started to create on those very topics in the description. And I encourage you to check them out, and definitely make sure you're subscribed, because I'll be doing a lot on that topic going forward. All right, so there you have it. We covered a lot of ground in this video. As always, we took a look at recent price action. We saw some of the encouraging signs around price discovery, as well as this kind of ever worsening supply crunch of Bitcoin on exchanges. Institutions are here. They're buying up from weak-handed retail investors. We also saw the fact that despite miners having sold quite a lot of Bitcoin over the last couple months, which has kind of kept price a lot lower than it otherwise would be. Their fundamentals are healthy. Their business fundamentals are very healthy. Hash rate is at an all-time high on the network, which is a very, very good thing for the security of the network. And so, a lot of folks kind of expect to see some pretty significant fireworks for Bitcoin now that, miners have switched from, net selling to net accumulating. And so I think it's only a matter of time before we see some pretty exciting pump action. We also took a look at institutional activity and saw the kind of double-edged sword that comes with institutions and platforms driving kind of mainstream adoption. But with that, it is super critical for that adoption to be responsible and to take ownership and responsibility of your Bitcoin at all times. And so for now, we'll go ahead and leave this video here. If you like this video, you already know what to do. Make sure to give it a like. If you're not subscribed, subscribe and turn on notifications. I'm going to be doing a lot of great videos in the future. One of the next ones, I'll go into the Lightning Network, which also hit a great milestone recently with over 10,000 nodes on the Lightning Network. So very, very exciting stuff. But for now, we'll go ahead and leave this here. As always, every cent counts. And until next time.